Hello, this is Coach Mike from winningstockcoach.com. I'm going to get started with my weekly market overview video for the trading week beginning June 29th, 2015. Going to start out by looking here at the weekly chart of the SPX, that's the S&P 500 chart. As you can see, we've been kind of toying around with multiple top points and kind of pulled back from them pretty well this past week. Looking at any immediate downside, I think this 2067.29 would be what we were looking for, although I do still think it's probable we hit this 2022.07. Didn't quite come within 0.5% of our target up here, which we've actually been pretty accurate in hitting within 0.5% of 59 straight market moves. So maybe a little bit more upside into this 2138.93. One thing we got to look at, there's a holiday ahead, but the holiday is Saturday. So I really don't think it'll have much effect on slowness of the week. But we are going to kind of be getting into earnings a little more heavy a couple weeks from now. We've had a few sectors that have run really, really hard. Financial stocks are one of those. 7 of the last 8 earnings periods, they've pulled back pretty heavily into their earnings. So if we were going to look at a time where we could see a little bit of a market pullback out of this consolidation, I think this could actually likely be a setup for it. When I go over to the daily chart, had a little bit of concern when it failed this swing high point the other day, but at the same time, normal 50% retracement, and it kind of stayed right there. I'm going to put some Fibonacci retracements up there, let you see what I'm talking about. Kind of just hanging out in that mid-level area. With that, it's kind of one of those things where Monday could be the telltale sign. Monday could be the time where we either go up, and due to the multiple tops, you kind of want to be really, really, really hesitant if you hit around 21, 26 or so and begin to pull back in the S&P. And if we go down from here, you've got just a shorter term short, I believe, to this 2067.29. Going to look now at the DJI chart. That's the Dow Jones Industrial. We're back to the weekly chart here. This one actually looks considerably worse than the S&P 500. What we really, really, really need to be watching for at this time is what I believe could be very, very hard on stocks if or should it happen. And that would be a failure of 17,712. We're going to look at that, and you can just kind of round it to make it easy, 17,710, because it's really not that much when you're looking at something that's in the 17, 18,000 mark. But really what we got on the DJI is a consolidation range that doesn't award us that much to the upside nor that much to the downside. Therefore, in the meantime, I believe the safest bet for your capital and my capital for sure is to not look to do a whole lot while it's in this consolidation range. Over now to the RUT, that's the Russell 2000 Small Cap Index. Over the past 7-8 weeks, we talked about the setup trade for the long end of the target of 1287.52. As you can see, it kind of popped above it, but did not close above it, began pulling back from it. With that being said, I believe you look for a pullback either into the swing high, which isn't too very far away, the value there, 1267.54, or this 1228.49, and you look to just swing it again and pop it on the next up move. Over now to the NDX, that's the NASDAQ 100 chart. Again, multiple tops, 3 tops in the same range. We have a couple bottoms in the same range. Quite literally, until we break below 44.53.79 or break above 45.36.78, those would be a support point of 45, 36, 78 if we break above it. A resistance point, 44, 53, 79 should we go below it. And you have to be a little hesitant because until we get a weekly candle to close outside of this really tight range, I just really don't believe you're doing yourself a favor by looking within the NASDAQ 100 for a trade at this time. Real simple in the upcoming week, and I'm going to go back to the SPX just to kind of talk about it a little bit. A lot of consolidation ranges that have popped up, much tighter in the DJI and especially the NDX. If we do get a little bit of a downturn, the RUT might give you the best trades to the short side, just simply because it's just coming off of its top of the run where everything else has kind of gone a little bit sideways. Watch your range breaks up or down from your consolidation ranges, and use those range break levels as your support or resistance, depend on the directional move of your trade. I really believe, come Monday, Tuesday, we'll have a pretty good idea of how we're looking overall. And I really don't think it's going to be made that difficult for us. This is Coach Mike from WinningStockCoach.com wishing you the best of luck in your upcoming trading week, and God bless.